Hello and welcome to another edition of our ETF Insight series, where we chat with innovative leaders from the ETF and digital assets ecosystem. Today, I'm delighted to be joined by Frederick Chu, who is Executive Director of Asset Management at Haitong International. Welcome, Frederick, and thank you for being here. So why don't we just kick it off and have you tell us about Haitong and what you do?
Sure. Thank you, Andre. Thank you for having me today. Haitong Asset Management, it's a part of Haitong International Securities. We are one of the top three securities brokerage based in China, originally from China. We provide full-fledged of financial services to our investors across from wealth management to investment banking and to asset management. So within asset management, we are currently managing about $8 billion of assets, where we provide investment solutions to both institutional and retail investors. We offer active equity investments, fixed incomes, as well as ETFs. So I have been with the firm recently, where I was working at another, Chinese fund house called China AMC before. Now Haitong has a global presence where we offer investors, various kind of solutions. In terms of landscape, we originated from China. Hong Kong is our international hub, where we also have offices around the globe in Singapore, India, and also London and US.
Great. No, thank you. And where are you seeing, since you're involved in the ETF industry, where are you seeing the kind of catalyst to growth within the Asia marketplace? And can you give us a little color on the landscape there?
Yeah, if you look at the Hong Kong ETF market for the past 2 decades, the total asset size, as well as the number of ETFs issued by various issuers, has been gradually increasing. Hong Kong is actually the second largest ETF market in Asia Pac after Japan. But in terms of the investor space, and in terms of the issuer and the variety of ETFs is actually growing bigger and bigger. I would say from a development perspective, the time where Hong Kong ETF market really picked up, it's somewhere around 2013, where the RQ fee scheme was being introduced, and Hong Kong at that time, the ETF market has been integrating into the mainland body, where we got mainland investors being recognized by Hong Kong from being issued A-shares ETFs, and we've got the global investors having the right assets and cost-effective assets to invest into the onshore A-shares. And the second catalyst in the past has been evolving through the global indices inclusion of the China A-shares, as well as the bond inclusion. Now, the reason why I mentioned the onshore China market, it's because in Hong Kong, the top 5 ETFs is mostly traded in terms of the asset size. It's quite either Hong Kong equity or China A-shares equity dominant. But in the past 24 months, we have been seeing more different variety of ETFs, including leverage inverse ETF, which are either futures-based or swap-based, with underlyings in U.S. equity, Hong Kong equity, and the China A-shares, and also the evolving of the ESG scheme.
Yeah, that's interesting. I was going to ask you about ESG and how that's evolving in Asia, because it's definitely, obviously, I think Europe is the biggest marketplace for accepting ESG products and is ahead of even the US. So now how is it looking in Asia right now with ESG products acceptance and kind of what's out there?
Yeah, I think it's a very interesting outlook in Asia regarding ESG, especially after the pandemic, when people are very much caring about the community, the sustainable investment, sustainability of the various business, and also on the environment. In terms of environmental protection, China government has been putting a lot of effort into ensuring the carbon neutrality, for instance, for the next 5 to 10 years. So with a push from the Chinese government, it's actually affecting a lot of within the ecosystem of the Greater China area. I was reading a survey from a worldwide custodian bank, and they were actually talking to end investors, with over 90% of them has been indicating within Greater China area. Over 92% of the investors has been indicating that they will be allocating to ESG investing in the next 12 months. So I think the investors' traction is coming up here. The only concern, or one of the major concerns, I would say, from the investors' point of view, is whether the ESG goes against the performance. As we probably know, that you're doing a good thing doesn't mean that you get return on the next day. But then we have do some sort of market studies with conventional market as against the companies that we screen out with better environmental governance, especially within the DM and N as well as EM markets. What we have found out is that the ESG the screening that applied to EM markets tends to have a bigger performance impact over developed markets, especially if you imagine countries like China that we have been involving from our economies, as well as the governance and environment. The impact that those good things that's been done by the companies will be more reflective in terms of the P&L, in terms of the share prices, and also the stakeholders' performance.
Yeah, no, that's really interesting, and I think it's just globally now you can't really avoid the ESG, so it's great to see that all different regions are accepting those products, even regardless of potential maybe performance not beating what their anticipation is. But it's really great to see. And Frederick, I really appreciate your insights. Very interesting. Thank you everyone for watching. And if you'd like to read more or watch more from our ETF insights, you can go to our website, which is blackwatersearch.com. Thank you for watching.
Thank you.